And welcome back to Relevant Founders, brought to you by Relevant Software. Relevant is an international software development company that designs, builds, and delivers world-class standard products for Fortune 500 companies and promising startups. Today, we've got with us Eric Satz, founder and CEO of Alto. Eric, hello, nice to see you today. How are you?
I'm doing quite well, Matthew. Great to see you too.
Good, thank you. We just spoke a little bit before I pressed record, and 11 o'clock your end, in the evening my end, so nice, well, kind of early over your end. Let's get to it, Eric, straight away. And tell me, what I want to know first, before we start talking about Alto, is tell me a little bit about you. Tell me about something about you not many know, perhaps.
Well, I've actually done a few of these, so I'm not sure I can come up with yet another fun and interesting fact. I'm just not that interesting. But I grew up in Miami, Florida, which not a lot of people actually grow up in Miami and then talk about it or live to talk about it. And it was a part of my childhood, which I would never trade for anything else. There was a lot of growing up in a very short period of time, and there were many external influences, both from those who were from the United States and those who were not from the United States. And it was just a very formative time for me, as I think, sort of those kind of 12 to 18-year-old years are for most people. Mm-hmm. And, like I said, I'm glad I'm still here and get to talk about it.
Very nice. Why you said in a very short time you had to grow up? Why was it kind of in a very short time?
So Miami was a very fast city, and I think it's become an even faster city. Uh-huh. And I'm not trying to pick on any kind of Midwestern state or city in any of those states, but there was a difference between growing up in Miami, Florida, and I think Oklahoma City, Oklahoma, which has a great basketball team, by the way. So I'm not picking on Oklahoma City, and I'm not suggesting that one is better than the other. I'm just saying that Miami was a very fast environment in which to grow up, and I love it for that.
Let's start with Alto. Let's start with it. Tell me the story behind 2016. You started, yeah, 2016. The idea came to life. How long were you working on it before you actually managed to bring it to life?
Actually, probably about 3 years. Uh-huh. So the idea first came out of my own personal experience. And if we just back up for a second, Alto's mission is unlocking alternatives for all. And by alternatives, we're referring to assets which are not publicly traded. They're not registered securities. So you can't go to the NASDAQ or NYSE in order to invest in these things. And that's sort of the negative way of defining it. The positive way of defining it is to say these are private equity assets, venture capital assets, farmland, real estate, artwork, securitized collectibles like Rolex watches, Michael Jordan sneakers, or antique automobiles, and of course, crypto. And so it's our mission to make these assets available to all retail investors. And historically, they have been off limits to those except for the high net worth, ultra high net worth individual. And we're trying to break those barriers down. So back in 2013, I wanted to use my retirement account to invest in a private company that I was involved with. Mm-hmm. And no one would let me do it. And yet it was legal. And so I had to go about figuring out how to do it, which I did, but it took a hell of a long time, and it cost me a whole lot of money. So I did what any rational, sane person would do. I did it a couple more times, and had the same awful experience. At which point I started talking to people like, hey, don't you think it would be this great idea if we built this platform that made this process easy, and people would have way more options. And of course, as is the case with many ideas, everybody was like, if it was something that anybody cared about, like Fidelity would do it, or Schwab would do it, or TD would do it, or E-Trade would do it. I was a bit like a dog with a bone, right? There was a reason they weren't doing this. And so I sort of dug in a little bit more, and it was trying to figure out, am I really the only person with this problem? Am I really the only person who wants to do this? Are there more people? How many more people? How much money are we talking about? And it turns out, we're talking about $30+ trillion sitting in retirement accounts. Less than 2% was invested in alternative assets. And so I went about figuring out why that was, because most people have at least 10+% of their assets invested in alternatives. Why are the rest of the retail investor community so slow to adopt? And what I found were 3 barriers to adoption. One was knowledge, that the fact that you actually could do this with your retirement money. The second was complexity. Yeah, I've been an investor for a long period of time. I was a former investment banker. I was a venture capitalist. Like, if you didn't understand the lingo and the documents that are involved, like you probably just like, forget it. I don't have that much time. I'm not going to do it. And then the third thing I mentioned earlier actually was cost. So if you weren't writing a significant size check, you really couldn't justify the carrying costs for these assets, for 7 to 12 years. For the most, other than crypto, these are illiquid assets. And so for me, I thought, you know what, if I can build a platform that solves for those same problems that TurboTax built to solve for a similar problem with people trying to figure out how to file their taxes, at least in the US, well, then I figured we could build a big business. And that's what we've been doing. And so raised money at the very end of 2015, early 2016. Today, we've got, close to $1.25 billion of assets under administration, almost 30,000 customers, and lots of different partners, and we're on our way.
Talk to me about your original MVP. What did your original MVP look like?
That's a great question. So the original MVP was pretty simple, which was to say, hey, you, the investor, we're going to, serve as the trust company custodian for your retirement investment. And it turns out that a trust company or other legal custodian is required to custody retirement assets in the United States. We're gonna connect you with a company that you want to invest in, and we're gonna take all of the communications and transaction execution out of the equation so that it's really light work on both the investor side and the company side. It took me 10 weeks to do my first investment, and that was after I had identified the custodian. With some of our fully integrated partners, you can do all that same amount of work in less than a minute, literally.
Whoa, okay.
So from 10 weeks to less than a minute, if you're a fully integrated partner of ours, like AngelList or Masterworks.
Time is money these days, yeah. So
yeah, no, there are a lot of those, and so that was the goal. But the MVP was to show that people wanted to invest their retirement money in a company, and that's how we started.
When you were doing it right at the beginning stages, how many of you were working on it? How many of you were working on the MVP, or did you get it outsourced? How did you work on it?
So so we outsourced the technology build to really just one person who would eventually become the CTO for a short period of time, and then we outgrew him. And you're asking the age-old question, which is, how do you start? And you just do. Like, if there's a will, there's a way. And so you find the people who can help, because I'm not a technology founder, right? I'm a business founder and more of a product founder. Like, I knew what I wanted the product to do because I wanted it to fix all these bad experiences that I had. So I could provide product build oversight, MVP build oversight, but I couldn't actually do it, right? I can't code. I couldn't code to, get my way out of a paper bag, right? Like I'd be stuck there forever. And so we hired this one. That's a royal we hired this one outside developer, and then I actually hired another part-time person to help product manage that process with the developer, because I don't really speak, engineering language. Yeah, that's how we got started.
So with that from the beginning, obviously a small team at the beginning. What are you looking at now? How big is the team now?
114 people now.
Nice. Wow. Okay.
Yeah.
And how was that putting that together?
A little bit different.
Yeah, slightly. How was that putting it together? What were the challenges that you faced getting to that number?
God, that is such a loaded question, Matthew. I think your first hire, what I don't think a lot of people necessarily acknowledge or speak to is how important your first hire is, and then how important the next 9 hires are. Because your culture really is built there. Like, what happens with those first 10 people, who they are, how they interact with one another, what their expectations are for success, what their expectations are for quality of work. Like, that sets the tone.
So true.
For the rest of history. I mean, it's very hard to change. And so, getting those first 10 people right, I owe a great deal of credit and thanks to all of them. And then I think from 10 to 30 is a different challenge, because you can no longer, at least for us, people can't all be in the same room and people can't know everything. With 10 people, everybody can still know everything, right? Everything that's going on, and feel totally included. And in fact, whenever I was raising money, I would do all those Zoom pitches in the office, and everybody else could listen.
Yeah.
They could hear, and and then they could ask questions after, and all of that stuff. But when you go from 10 to 30, like, too much noise, you can't do that anymore. Right. And then, by the way, not everybody needs to know everything anymore. And sometimes people get their feelings hurt. Like, how come I didn't know that? Well, I mean, we don't need you to know that right now. We need you to do this and that other thing. Because even as, at 30 people are still wearing multiple hats. Like, when you're at 10, people are wearing 5 hats. When you're at 30, people are wearing 2 or 3. When you're at 80, we want you to wear just 1. And then people start to feel like, well, I mean, I thought I was doing this. And it's like, you were doing that, but we really need you to do this important thing. And we're getting somebody else who's an expert in that important thing. Right. And raising a business is no different than raising a human being, raising a child. Like, there will always be issues. They're just different issues. And they're of a different class of issues. Right.
What has been the hardest part then? So obviously you've got the first 10, the first 30, 80, now 114. What was the hardest part for you to get right, let's say?
So you're not going to bat 1,000. Okay. You're going to make mistakes when hiring for different reasons. Sometimes, actually, I'm going to say it this way. Oftentimes it's the mistake is on both sides, on the person who got hired and on us in our hiring process and decision making. And the hardest thing to do is to not let that fester. Right. So there's a saying, which isn't going to be new to your audience, which is hire slow, fire fast. I know pretty quickly when I've made a mistake. And so I get the second half of that equation pretty well. But when you're growing very rapidly, like we grew right from 2020 to 2021, from less than $400,000 in revenue to more than $6 million in revenue.
Wow.
When you're going through that kind of growth, you're stressing the system, and your default is to hire quickly because you feel like you just need warm bodies. And you make mistakes when that happens. And so then oftentimes you feel bad about correcting them, because the mistake isn't necessarily the person you hired. It's a two-way street. But I think one of the things that we got right at Alto was creating a people team earlier than most people do.
Mm-hmm.
And I think we were probably somewhere in the 30 to 40 individuals at the time when we hired a VP of people. And I think it was the single smartest thing that we did.
Okay, so when you started, you were saying that no one else was really doing what you're doing. Yeah, there was not really anyone out there. Were people standing on the sidelines kind of watching you to see if it was going to work? Have people now started joining you now they've seen it worked?
So people always like to sit in the stands at a bullfight, right? And like see if the matador makes it out alive. You know, it's apparently good entertainment. So yeah, there were a lot of people on the sidelines, and there are some people that are doing parts of what we do now, but there's still nobody that has put the whole platform together in order to unlock access to all alternative asset categories. There are some that do just crypto. There are some that do just the other asset side, although it's not really technology enabled. It's still people, paper based, very time consuming. And so we're really the only ones who have built this platform that connects what we reference as the supply side and the demand side, right? The demand are your investors, and the supply side are those who are trying to raise money. And Alto serves as the transaction hub. And we look to benefit from a flywheel effect and a network effect where, you know, someone who's looking to invest out of their retirement account brings a company that's raising money onto the platform. That company has other investors that want to use their retirement account and invite them to the platform. Those investors are investing in new deals. Those new companies bring more investors bring more companies. And, you know, it's fun to talk about now because that was the way we drew it up on the chalkboard, but it was kind of anybody's guess as to whether or not it would work. But, you know, sometimes you run the play and you have a good result. And that's what happened for us.
With that in mind, okay, so first of all, you're 114, I think you said 114? Yeah,
yes.
at the moment.
No, only because I heard that number less than an hour ago, so I happen to know it.
Okay. And how much of your work, how much of the products are you outsourcing at the moment, or do you do everything in-house?
No, it's all in-house.
Nice. Wow.
Our product and engineering team. Yeah.
Wow. What have been the benefits from doing that?
Well, I don't know the other, so I don't know that I can specifically say, right? Because we never, beyond that initial build, with really just one person, and at some point we had like 3 consultants, but they eventually became the initial engineering team. Yeah, we haven't outsourced anything.
Better the question then, why haven't you outsourced? Why did you choose for insourcing in-house all the time?
Because our mission matters. And one of, you know, as we recruit engineers to our team, I heard this last week. One of the things that potential new hires frequently comment on is the duration of our team. Like, they don't leave. Wow. They believe in what they're doing. And I believe that that's not something you can outsource. And I like to say to our team that at some point the technology isn't going to be just ours. Everyone's going to have it. It's going to be table stakes. And what's ultimately going to differentiate us from everyone else is the way we treat the client, the way we treat the customer. And that's just not talking to someone or emailing them or texting them or getting on a Zoom call with them. It needs to come out in the workflow, and it needs to come out in the messaging, and it needs to come out in everything that user sees at altoira.com. And if we hire people who believe in that mission, they're just going to build differently from someone who we have paid to just complete a project.
Tell me, okay, so you spoke a little bit about your CTO. So your first hire ended up being your CTO at the beginning until you outgrew him. You've got another CTO I saw since maybe 2020. You've had him a couple of years now. What was your kind of requirements for a CTO, and why was it so important for you? What were you looking for?
Someone who could actually recruit, manage, and own bigger picture architecture. And we got that in Bradford Winfrey. And now everybody's going to go to our fucking site and look them up and try and recruit them away, which is total bullshit. By the way, you people out there listening, you shouldn't do that. So that first engineer we had who would eventually become the CTO, what became readily apparent was that he didn't actually want to manage people. Like, he likes coding on his own and he likes the very beginning stages of things. And he was really talented. He made really good choices in the context of, what do we need for MVP? Right now, we're still paying off a bunch of those choices and technology debt, but that happens in, I think that happens in every technology-driven startup. And it's sort of silly to build a Cadillac before you know that anyone wants a car to drive, right? So first you just build a car.
Let's talk a little bit about the challenges. What has been one of the most difficult, let's go tech challenge, which you faced so far at Alto?
Oh, that's an easy one, Matthew. So I think it was July 6th, 2021. It could have been July 7th. It certainly went overnight. Hackers impersonated me with both Verizon and GoDaddy, and I could not speak any more poorly about either Verizon or GoDaddy and their abilities to deal with real people in real situations. And so they impersonated me and got control of the 2FA factors that were necessary to gain control of our URL.
Wow.
And it took us, I want to say, close to 2 days to get control of our domain back. And those were the worst 2 days of my life. Period, end of story. Now, the good news is that, and thankfully, thanks to Bradford and others, we had constructed our architecture such that getting control of our domain didn't give them access to what they were looking for. But we still had to kind of chase them all over the world in order to shut them down and to get control of the domain back. But that was easily the single most important technology challenge, and it was also the beginning of our InfoSec team, which we didn't have at the time. And I think hackers, and there are good hackers and there are bad hackers, and the thing that they have in common is that they're both really crafty, and unfortunately they're really good at what they do. And so that just means, from a info security standpoint, you got to be really good at what you do too. And we probably accelerated our InfoSec activities, by like 5 years. Wow. Right? In terms of who we hired, how we hired.
Did you have them before this, did you say, or did you have them just the info?
No, we didn't. It wasn't. We didn't think anybody knew who we were. Right? And it was always like something we were gonna do, and we knew we had to do it. We ended up doing it really fast.
Yeah, absolutely. I mean,
so that was that was the single worst thing. None of the policies that we had in place at the time exist today.
What is the currently, what is the biggest challenge you're facing at the moment at Alto?
Yeah, so I don't think we're alone in this. I say we're 114 people. We were 140 people. And so, we follow the numbers, we track the numbers, we don't like to be surprised. this economic downturn has hit everyone. And, so we've always wanted to be ahead of the curve, not behind it. And so unfortunately we had to let a bunch of people go about 8 or 10 weeks ago.
Wow.
And you know what, that sucks. And I believe firmly that once an Altonian, always an Altonian, and you never want to let somebody go. But at the same time, I had 114 other people to protect, and a company to protect, and clients to protect, and investors to protect, and
absolutely. I mean, it's sometimes
requires some hard decisions.
Tell me about your experience with fundraising. What advice can you give to other founders listening to this? How, because you've done it very successfully, how to do it the Alto way?
Wow. I don't believe that there's a secret formula or magic trick. I think what's most important is that when you find investors that you really want to partner with, and people who believe in you and your mission, then you figure out how to get a deal done with those people. Like I've never closed a round with a goal of optimizing for dilution or price, and the two go hand in hand. My goal has always been, who are the investors that are going to help us position ourselves for the future? And I've been in a really fortunate position that with both the Series A and the Series B, we had several different institutional investors who wanted to lead our round. And so, in the case of Series A, when we chose Unusual Ventures and Sarah Leary, it was Sarah's experience as a co-founder and an operator with Nextdoor. She helped build Nextdoor. That was really attractive to me. Beside the fact that we kind of hit it off, her experience in building a community was really attractive to me, because we believe strongly that we need to build a similar type of community at Alto. Obviously, it has nothing to do with neighborhoods. It has more to do with asset classes and how to make investments and sharing knowledge and know-how, but a community nonetheless. And so that's how we chose Sarah and Unusual. And then with the Series B, in choosing David Ibn Ali and AVP, Advanced Venture Partners, one, David is just an outstanding individual who, again, I kind of hit it off with and knew he was a guy who I could be in the trenches with and trust and share. And by the way, I feel that way about all my board members. I'm really lucky in that I have a very strong relationship with all the board members. So Amar Hanafi, Bill Gutman, Sarah Leary, and David Ibn Ali. And they're on speed dial on my cell phone, and I can kind of call them with anything and take their temperature. And also the other thing is, when I was looking for investors, I knew enough, and I've been around enough to know that I don't want people who want to run the company. I want people who want to provide me with advice, and guidance, and an understanding of their past experiences. And these people fit that bill. And at the end of the day, I have to make the decision. I try to take in as much input as I can. And by the way, they each provide input in different areas, and they have different experiences. And so I tend to rely on them for different conversations, for different things. But one of the nice things about AVP is they have a really big balance sheet. And it's so if I want them to lead the Series C, if they want to lead the Series C, they can do that. That plus they have a demonstrated track record of standing by the portfolio companies that they've invested in, even when the road gets rocky. Rent the Runway is a great example of that, right? So they were big investors in Rent the Runway, and that business has gone through several different cycles of ups and downs, and yet they've stood by them. And I want a partner who understands that it's not all up and to the right, that you're going to hit potholes, and sometimes you get big sharp declines. I think everyone's feeling that in this environment right now, and that's not the end of the world. So long as you have a plan. Yeah. So long as you have a plan. What's not okay is like just hope and prayer. Like that doesn't work, right? So, but to have a plan and be forthright and transparent, and engage in discussions, helpful discussions about what we think the future looks like and what our strategy should be or not be.
What do they look, apart from money, apart from the opportunity to build an amazing business, which is going to give them revenue, what do they look for in a person most of the time? In your experience, what have they, you've built great relationships with all of your investors. What have they looked for in you?
There's another saying where you bet on the jockey, not the horse. Well, we're in Nashville, so I guess you bet on the cowboy, not the horse. I don't know. So it's not my first rodeo, as long as we're going to talk about horses. It's not the first time I've done this. And I'm not necessarily, I'm not like trying to prove anything other than that this should be a big business, and that the mission is an important one, but I'm not trying to, I don't know. It's not about me.
It's the truth, basically, isn't it? You're just telling me.
Yeah. And I think, for better or for worse, I wear my heart on my sleeve, and what you see is what you get. And I think that's attractive to some people. It's not to others, but I think my board members, the people who have invested in Alto, apparently it works for them.
Yeah, definitely. What future trends do you see appearing in the next couple of years in the industry? What kind of, let's go 2 years. Yeah, 2 years isn't too long. What do you think is going to appear?
Well, I don't think I'm alone or original in saying that the washout that's happening in crypto right now is actually going to be really healthy for the crypto ecosystem. And I think the introduction of regulation and a regulatory framework and body that people can point to will also be really healthy and support what I think will be very significant growth for crypto and blockchain on a broader basis over the next 10 years. And look, it has to happen. We've seen it. We saw it in the internet, right? In the early 2000s. And so we're seeing it here. And I think that's healthy, and we'll continue to build and be positioned to help investors take advantage of that potential growth and potential upside. The other thing that I think we'll see is a more effective way for everyone to invest in alternative asset classes, and for marketplaces to develop to make it really easy for those who are looking to diversify their portfolios outside of just the public markets in order to enable reduction in volatility and potential increase in returns. I think that's necessary for that to happen, because as we say in the US, if you just invest in another ETF or mutual fund, all you get is one more ETF or mutual fund. You don't get any more portfolio diversification. And the way you get true diversification is to go into these other alternative asset classes. And so I'd like to see a true alternative asset marketplace, which Alto hopes to be a big part of, evolve within the next 2 years.
Really interesting. Tell me about, they mentioned Alto as well, to be a part of this. Where are you going in where are you aiming for the next couple of years for Alto to go? Where do you want to be 2 years from now? I know we've got obviously economic downturn and all of these things which are looming. How are we going to overcome this, and where would you like to be?
So we're lucky because we raised the round that we raised in December. You know, we raised $40 million and we've got almost all of that. So we're in a really fortunate position. Where I'd like to be is the Alto alternative asset marketplace. And so, yeah, that if you're looking to invest in alternative assets, you're coming to Alto to do it.
Last bit of advice you could give to all the other founders out there, something that you wish you knew when you were starting out on your founder's journey, what would it be?
Yeah, if you're doing it for the money, don't do it. Yeah, that doesn't work out well.
Nice. Very nice. Eric, thank you very much for your time today. It's been really amazing to listen to you. And I wish you and Alto all the success in the world for the future as well.
Matthew, thanks for having me. And, you know, I hope things stay safe where you are in Ukraine.
Hey guys, it's me again. If you enjoyed this episode of the show, be sure to press the thumbs up button below. And also, whilst you're there, hit subscribe. Otherwise, you could miss out on all of our interesting content we've got coming your way in the near future. Okay, guys, take care and see you soon.